No, I'm Mario, the founder and CEO of Gleam Bikes, and thanks for organizing this startup tank today. We are reducing 10 tons of CO2 per bike by replacing diesel engine vans from urban transportation. And we work basically with professionals, and that's also my passion with the whole team, a passionate team of bike and motorcycle experts from different fields to build the #1 brand for fast micromobility. And the customers all have the same problems. They get more and more requests to deliver within a city, their own goods, or as retailers, their retail goods and logistics companies. But cities have also the problem of increasing the quality of life. So they've reduced the classic fleets. So our customers have a problem, more requests, higher cost, but they can't really use their own fleets anymore. And they need a replacement that doesn't get them charged in congestion charging or their fleets banned. Cities like Paris reduced the speed to 30 kilometers an hour, which is about 20 miles per hour. And what fits to urban transportation, it's the bicycle. Bicycle doesn't get stuck in traffic jams, can use alternative routes. With electric support, can support up to 20 miles per hour, 25 kph. Basically the weight of the vehicle is the most using energy in city transportation. And our vehicles only lose 0.25 kilowatts. So we are not generating new renewable energy, we just use less. And all of that comes from renewable sources, obviously. Why is now the right time? Well, electric mobility is talked about a lot in four-wheelers, cars, and now trucks getting launched by Tesla. But the real boom happened in two-wheelers, and two-wheeler dynamics is our core expertise. My university, Technical University Vienna, knows a lot about two-wheeler vehicle dynamics, so bicycles and motorcycles, and we transferred that to three-wheelers. That gives you the capability of still building a really narrow vehicle, so you are fast and dynamic, use the less space, but you have all the stability of a three-wheeler on uneven roads, around the corner, on slippery roads, gives you more driving dynamics. And that's where we also filed for patents, or I have patents granted, and are in process of filing new IP in that space. And what we have built so far is a pedelec version. So our customers don't need the driver's license or need to get a license plate or use helmets or whatever. It's just every child can ride a bicycle. And our customers are mainly logistics or retail or craftsmen, B2B customers, and they can decide if they use Flex Work, Flex Cover, or Flex Life version, or switch between all of them. So we have customers, they do grocery delivery in Paris for Paris Fashion Week and for the catering service, and the goods arrive in the best way at the customer, faster and cheaper. And on the weekend, they want to use the same product for their family to go to a park or do outdoors to get some green outdoor time with the kids. And they swap just to the Flex Life. So they use the bike in their everyday life. The market is growing to an 80 billion e-bike market, or as the latest study in micromobility says, 260 billion in 2025. Our cargo bike market specifically that we address now is growing to 3.8 billion in 2030 worldwide. And we want to address the urban European CEP market of three-wheelers, where we want to get market leader with 150 million in revenue in 2030.
1 minute warning.
So far, we are positioned in the pedelec version, but now we can expand to speed pedelecs and other throttle, higher speed vehicle versions. And that gives now the opportunity to invest in our 3 million seed round at the 9 million pre-money valuation. Before next year, we do our Series A. We are 10 people, have experts in the advisory board, scaling Red Bull, or production at KTM, developing motorcycles for BMW. And we use the 3 million for new development, customization for some of our key account customers, and expand to other markets like France and UK. and before we go into full operational lease. And yeah, if you want to participate in the 3 million round, we have still tickets open starting at 500K, and we'll close end of Q1.
And time is up. And anyone that's watching this publicly, none of this is a solicitation. We are purely sharing information. If you want to learn more about information about them, of course, you may reach out because it's a free world. And let me bring in the other investor panelists now. Hand things over. Stephanie, you want to take it away?
Sure, absolutely. So just a quick question. Could you go a little bit more through your revenue model?
Yeah, so far we are looking on cash flow. So our customers are paying us 50% upfront after order and 50% after delivery. And they pay us about 7,500 euros for the base model. If we do direct sales, about 30% of our sales is direct sales. The future is more operational leasing. So customers will pay about 250 euros per month to just have always an operating vehicle, but that needs more cash. And we were looking on our cash flow. Inventory financing is our biggest cash need, was in the past. We have made now about 2.3 million in revenue over the last 2 years, 1 million revenue last year. And well, that needs a lot of working capital because our lead times of parts are pretty long. So we need to store. And especially now that we grow into key account customers, like we have pipeline of 4,200 bikes, that's 25 million revenue potential in the pipeline. And we need to finance that a little bit more. But that's why we are raising some capital, because that can leverage also debt funding. We will, for future revenue models, also sell service on the side next to the bikes that we sold so far. And because a lot of funding topics, government funding came up, some of our customers, depending on the country, like Germany, the customers get up to 4,000 euros funding for these kind of bikes, or 2,000, depending on the area and the city. So local or regional government grants for bikes for our customers.
Got it. And for your customers, what does the typical contract look like? Or is it sort of, per fee, on a fee basis?
Well, it's really only they buy one bike or 10 bikes and pay us for the bike for now. But we have, let's say, competitors who do operational leasing. So it's a 2-year to 3-year contract for them. We didn't do that so far because we couldn't finance that. We need cash flow coming back in, and our customers are willing to pay that for now. But a bigger growth factor would be to finance a fleet of 10 million would help a lot of customers to finance their operation. But it's also a risk factor. We didn't want to fund all the startups that raised a lot of venture capital and want then have a fleet and then go bankrupt. So we are glad to work so far with small, medium enterprises who are liquid for a long time, and we don't care about their future liquidity.
Yeah, that makes a lot of sense. And last question, just in terms of sort of how you all are getting customers, is it through inbounds? You mentioned that you have, sort of the longer standing, smaller, medium sized enterprises. So how long do those sales cycles typically go for?
I think the quickest direct sales was like 2 weeks, so an inbound on our website, and we closed it within 2 weeks. Those are the small, medium enterprises. The key account customers, which the biggest one was 10 bikes, they take between 6 and 18 months. So we have some customers in our pipeline who again postponed for another half a year. But well, the offer that's out there is for the first batch, 700 bikes, it's 6 million revenue. And we are now in the top 3 and want to close them in between May and July this year. That's what they say, where they do the decision between the final 3. And they do testing. So they pay us mostly for the tests, like monthly fee, test the bike in their fleet. and based on that, do a decision. But that's a future growth model. The other sales pipeline, which was over 50% in the past, was through our dealers. So the bike dealers, we have about 60 bike dealers in the DACH and Benelux countries. They have longer lead times, but if they then order, we deliver within 6 to 8 weeks to the dealers, and they then deliver to the customer. And these take about, let's say, 15%. This is what I share publicly of margin.
Did you say it's like up to an 18-month sales cycle for 10 bikes or 70K?
No, that's the 700 bikes.
Okay. Then that's a little bit more interesting then. Okay.
Can I talk about that fleet purchaser? So you're in the final 3 for 700 bikes. How many fleet buyers like that are there in Europe? And then my real question is, how do they compare and contrast you to the competitors?
Well, first of all, we had like two full-time salespeople last year, and they built the pipeline only in the last year with those key accounts of about 4,200 bikes. And we had a social media budget of 15,000 for the whole year. So that was almost nothing. And we built that kind of pipeline. I think we will close between 10 and 20% of those for the next year. But the potential for those fleets is, I think, about 20 to 25% of our future revenue. I think key accounts will give a lot of sense, but we also see small, medium enterprises, craftsmen as our strengths. Everyone who wants to deliver. I'm not sure. I mean, Alan, you're from Dublin. There's a big competitor from the UK now, EAV. They build four-wheelers. There are some in those areas. I don't see them as competitors. I think a fleet owner wants to have a separate, bigger vehicles to smaller vehicles because every delivery is different. And we also have the customers who want to buy now the 700 bikes. That's just the portion of the whole fleet that they purchase. Is that the question you want to go to?
It's kind of, if I can just dive a little deeper on it. So in, pick your big six in Europe, there's going to be 20 or 30 potential customers who could buy a fleet of scale. Because or there's 10 or there's 5 or whatever the answer is going to be. Because I'm trying to figure out how many unit customers there are likely to be of fleets, because there's the business model over here with distributors and agents to sell 1s, 2s, and 3s. That's fine. That's one thing. Or there's a key account model over here to sell 300s, 400s, and 500s. And I'm trying to work out how many unit customers you think there are that are going to shift to these type of units. And then actually my real question underneath that is, how do you compare and contrast to either product coming in from the Far East, existing competitors? What do these fleet buyers look for? Is it battery performance, which is a commodity? Is it comfort, which is a commodity? Is it mobility, which is a commodity? And I'm wondering how you compare that way.
Yeah, let me address those in two separate topics. I do think the segmentation is really in the fleet owners, which are postal services, the classic French Post, Dutch Post, etc. And they all start replacing their existing fleets with electric mobility. So when we only talk about Europe, then we have those bigger UPS, DHL, Amazon, so between retail and logistics companies. They really depend on government regulations. And this is what's happening. Everybody who wants to do last mile delivery to cities, to the high paying customers, need at a certain point to switch their fleets to a more environmental friendly solution, first of all. And when we compare to a 60,000 euro electric delivery van, well, 7.5 is almost nothing. Yeah, you can't do a next day delivery model with our bikes, but that's also what customers demand. They want same hour or same day delivery. So you need faster versions. And that's kind of also the differentiation of us against others. We focus on not the 15-minute deliveries, which in my opinion is not long-term efficient because you don't ever make a margin on that. You need to do micro tours. but not 8-hour tours like the next day delivery model, but in the time zone of 2 to 3 hours. And that's how you make an efficient logistics operation. And you do, at the other hand, that good customer convenience. And that's also what our good customers do now. They do delivery times of 2 to 3 hours, and they combine several customers on one tour. And the vehicle dynamics is kind of the core technology that we use, but what customers really like is making their operations efficient. So they always think about how much does one delivery cost. And in the past, it was like just put a big van with a lot of packages on one tour, and then you do like 10 to 15 packages per hour. And that's how you get to a like €1 delivery cost. At us, we do a similar thing. We combine them and give you more speed. And the bicycle or the e-bike or the speed pedelec always give you the highest speed from customer A to B. And that's how we reduce the cost. So we are 30% faster than any other diesel van because you don't get stuck in traffic jams. It's easy to park.
But there's a lot of cargo e-bikes out there as well.
Yeah, they are either slow or ugly or not convenient. So our customers, I mean, you said it's a commodity, but we figured it out over time. Sometimes we were proud of our vehicle dynamics, but sometimes just to change the saddle was getting the customer, the driver, more happy with our product than everything else. So it's really having the driver and the buyer and everyone in the cycle happy that made us successful in the past. And
what makes the bikes faster, though, than other e-cargo bikes? I don't understand.
Well, so the classification I showed a little bit on one picture was that you have the two-wheeler cargo bikes. They have low capacity. So if you just want to deliver 1 or 2 packages, that doesn't fit. So you need a higher volume. And higher volume normally goes with wide, big, heavy vehicles. And those can't drive at the speeds that we can because of the driving dynamics that we have. So they are unstable. Downhill, they are unstable at 25 kilometers an hour, and ours are not. And you can still, because they are super narrow, go on bike lanes. So you can use the bike infrastructure, and that gives you the ability to not get stuck in traffic jams as other bigger vehicles do. We don't compete against those private vehicles. Those private vehicles are not suitable for heavy-duty logistics, but we are kind of taking everything out of what's still a bicycle and can be used as a bicycle. And that's also what gave us the advantage to go to the market now. But the technology gives us also the opportunity then to increase our speed of the vehicle to speed pedelecs and throttle only, so 45 kilometers or 30 miles per hour. And this is what no other competitor can do with the technology that we have right now.
Why not license the technology then as opposed to becoming the manufacturer?
Well, that's the request that we got now. For example, some Indian companies reach out to us because the Indian market is booming and they know that in the car, electrification is going from 5 to maybe 15% market share, but 2- and 3-wheelers is going from 10 to 100% in the next 8 to 10 years. We see the same happening in the African markets, where all those motorcycle markets. So that's is an option then. If we have established our brand in Europe to do licensing, but doesn't need to be the case. We're also in discussions now to maybe early sell our company to a bigger vehicle manufacturer. And that's also the possibility then to scale internationally. We're in current discussions, but we do think there's more possible than only be a vehicle manufacturer. Then at the end, the fleet owners need the software and the routing software behind it. They need the operations and they need battery swap solutions. So combining all of that, in my opinion, is the VC case behind it. Just to stay as a vehicle manufacturer is exactly as you said. Then we could sell to a bigger corporate now, or do technology licensing.
I think you just lost all the VCs because you said you were considering selling to a bigger corporate now.
Well, I do think we can also scale still with the VC and sell at a later stage. There's at every level between every round already the opportunity for an exit. I do think that's possible.
I agree, but when you're working out or you're trying to resist eating a cake or you're trying to resist something and it comes down to emotional willpower, the first time you allow yourself to accept that decision of maybe it's time to call it quits, it's hard to last through that roller coaster that comes afterwards and keep pushing yourself once you've already decided this is good enough. That would just be my 2 cents in terms of kind of venture type outcomes. That's something, I don't know if Alan or Stephanie would agree with me, but if you think about selling out that early, it means generally you don't want to go that long.
Well, I mean, not that long. I mean, I'm doing this now for 10 years on the company. I started off with R&D on the R&D side of it, and then we're on the market since 3 years, and I'm considering all options. But I do think it is possible, but if we don't close VC on time, we still have to figure out all other options. And I think that's the nice thing, that we already do revenue now, and it's not only a potential future exit and IPO, but we could do that early on as well. So yeah, but I'm not saying that I want to get out of that business. That's definitely not the case. That's also when we discuss with potential exit partners, how can I still participate and grow the company, but in another corporate? And I think that's feasible in both ways. But I'm happy that you see it in a different way to get that feedback. But that was also kind of our strategy from the beginning. It's like, do we just build something that will go to the market in 5 to 10 years, like a big unicorn without revenue? And that's not what I wanted to build. I wanted to bring a product to customers early on, learn together with them how the market is shaping. And that's also what we see from key account customers. We only work with those who already know what they want. A lot of those out there, fleet owners, they just don't know how to solve the problems that they are facing. And we help those who already do decisions now.
Okay. Stephanie, Alan, any last questions?
Just a quick clarification. So for your startup now, have you said you've been working on this for 10 years, or is the life of the startup 10 years? How long has the company been around?
The company is around for 10 years, but the first 7 years was R&D. For R&D, we got 200K grants, and I was in some R&D projects, like 5 million projects, just as a startup. And since 2019, I got first investors on board to bring the product to the market in 2020. So from first investment till the market was 1 year, and now we are since 2 years on the market, 2.5 years. And since last year, we have brought the manufacturing assembly line in-house and built the structure for scaling. And I think now it's the right time to scale with the Seed Plus Series A in the next year. And that was not so easy when we were still in prototype phase. It didn't make sense to raise that much money at that stage. We wanted to have market traction and show the right product market fit, and that's what we have done now. And now it's time to put more money in and grow that.